This morning, we took a trade on gold, which happened to drop over 200 pips to the downside. A move that some of our members made over $4,000 in this one trade. But I closed my trade at my entry with a total profit of $0. And in this video, I'm going to show you the exact risk management framework that I used, which told me to get out of this trade. And I'll explain why, even though this trade still played out, missing the move is still a win for me. To do that, I'm first going to show you why my initial bias was to look for sells on gold, despite having a lot of confusing economic data to start the session with. Then I'll walk you through my live entry and the exact reason why I closed at break even. And finally, I'll explain why ignoring Fed speakers is one of the biggest mistakes a trader can make. This morning, we were starting the day off with a lot of economic data. If we take a look at the economic calendar here, we can see we have GDP data here, we have PCE if we go down a little further, and then jobless claims. Now, these are all very different pieces of data. Jobless claims is labor market data. PCE data is a measurement of inflation, and GDP is a measurement of the economy. The trick here is to identify this. You see how it says period Q1? That means this data is for quarter one. Now, if you look at what the day is right now, we're almost in quarter three. We're at the end of quarter two. So very unlikely that this data is going to be important. I'm still going to be watching this data when it's released. My focus is going to be here on jobless claims because this is labor market data. And honestly, even then, the Feds have specifically been telling us that they don't believe the labor market is the source of inflation. Because of that, the labor market data hasn't been reacting the way that it used to. Now, taking a look over at this data, once again, I don't believe any of this is that important. Even after this data passes, I'm keeping my bias to look for sells on gold. Market fear would make me want to look for gold upside. I'm not really seeing what would be causing market fear right now, which is why my bias is still to look for gold sells. Now, regardless of all of this data, I still believe the markets care more about the geopolitical tensions, the trade war, the negotiations around tariffs, than they do about anything else, which is why I really don't believe that that data is that important. And if we take a look over at gold, when the data came out, we were getting a pretty aggressive push to the upside. I hope this could be a learning lesson on a lot of people who tried trading economic data and they don't know what they're doing. When you take a look at this here, these candles, this move here on gold was happening before the data came out, and then this happened after the data came out. There are a lot of people that I hear that they'll see this happening before data comes out, and they think it means that the markets are getting ahead of you, that it's a hint that you should be getting in now and it's like a sniper entry or something. Other people think that it's some type of fake out. This is a liquidity grab. It spiked up so that way it could sell off because it knew it was going to happen. I promise you, if you go back test just this one piece of data alone or just whatever you want for economic data, you will find that that is not true. It is extremely inconsistent that you get a spike up before data and then it's a liquidity grab every single time. It's extremely inconsistent to say you get a spike up before data and that it always takes off all the time. It's not true. It depends on the data, it depends on how important it is and what number the data comes out as. So all in all, my bias is still to be looking for gold sells. Now, to be fair, if we take a look at how the data came out, now I'll circle some of the more important ones here. If you see all these lightning bolts, this means a surprise. So we have GDP here that came out higher, also core PCE higher, and then we have a surprise here, GDP final lower. This is already looking like mixed data. And then we have down here, continuing jobless claims came out a surprise above expected, but then when you look here at initial jobless claims, it came out below expected. So when we're looking at this, I'm seeing a lot of mixed data. I don't like trading mixed data. I just didn't want to enter this, even though I'm bearish on gold. I didn't have reasons based on the data on what I was seeing. Now, what would give me reasons would be something to tell me that there's a strong economy. If the labor market was strong, I see dollar gaining strength, okay, I can justify entering this based on the volume, the data, and the direction of gold. But because the data wasn't really telling me that, the only thing that was telling me that was price action on gold. And for me, that's not enough to have conviction to take the trade. So when we play out gold for a little bit, the entry that I did take would be right on this candle. I entered right on this candle. If we can find the clip, we'll put it right here.
Yeah, I'm gonna take a stab at this. If it comes right back into this zone, though, this is obviously a no-go. But for right now,
the main reason I entered this trade was because I was seeing volume and it was following my bias. My entry was somewhere. I entered impulsively on the open candle as it was breaking support, following my bias. I'm okay entering it, especially because I was seeing volume here. Now, the reason I didn't want to stay in the trade, if we play out the next candle, this is the candle I closed on my entry.
Yeah, I say this, if I take a breakout with volume, I want that shit to actually be a breakout. But if I enter on the breakout candle, it doesn't break out, and then it comes back to my entry, I'm going to close, which I just closed up my entry.
Right here, right as it came back down. I didn't wait for the closure because here's the thing. When we look at the time, this was happening at 8:45 a.m. Eastern time. And at the same time, here's my news feed, 8:42, Fed's Goolsbee was speaking. So we have a Federal Reserve speaker talking, and gold was, for the moment, consolidating, and then we start to see that break. So I'm comfortable taking a trade that's following my bias with volume in a breakout with reasons behind it. But when we take a look at these comments, there wasn't anything here necessarily that was telling me that gold should be dropping aggressively. Some of the things that I would want to see if I was going to see, gold start dropping aggressively would be something talking about holding rates higher. There's a lot of uncertainty here. So it's not to say it's wrong to take this trade. It's to say that when we have these Federal Reserve speakers, we can even see more here, Fed's barking. There must have been 4 to 6 speakers mixed with Trump, which you can see here too. There's a lot of risk holding trades here. So taking the breakout, I'm really happy it played out. Other traders held it. And even if we play this out a little more, we can see that it dropped another 50 to 100 pips right down to this next support. Really, really nice move. Now, it's easy in hindsight to look back and be like, oh, this was a perfect trade. I should have been in this. I would have made 250 pips. And then you just start measuring how much you would have made and beating yourself up over it. And in my experience, number one, that's really not helpful to do to yourself. But I like to ask myself these questions when I'm looking at trades like this. Do I regret not holding this trade? Here's the thing. If I entered on this candle here, right? I entered as it was breaking. I was seeing a Federal Reserve speaker talking, and I wasn't seeing anything that would make that I can see would make gold drop. But it is still following my bias, so I took the entry. For me to take that entry, and if this candle closed like this on the one that I entered, I would have held the trade. But because the candle that I entered came back up, and then this next candle right here, it came down to my entry, and I'm watching it, and I'm like, you know what? I have an opportunity right now because my first candle that I wanted to see close below didn't do it. And now it's at my entry. So I'm like, I could hold it and just see if it continues and I'm still right in the bias. Or if this flips and I end up taking a loss when I have the opportunity to close, coupled with the fact that the first candle that I wanted to enter on didn't give me the entry I wanted, I'm gonna be pretty upset with myself if I take a loss. I'd rather take break even. I don't chase trades. If I had a good entry, I either have to have the confidence to be in it. If my confidence for some reason disappears, I'm going to let the trade play out regardless of what happens. Unless if I get a new reason, headlines, news, data, whatever. There's always something that's gonna happen in the markets. But if I got the good trade and I wasn't comfortable there, why would I be more comfortable down here? That's where FOMO comes from. You're just forcing trades. There's gonna be days where you'll spend 2 hours in front of the charts and end with nothing, right? No profit to show for it. And then there's gonna be days where you might be in the computer or phone or whatever for 15 minutes. You might make more than you made in the whole week in one day. The number one thing that I learned to do is, regardless of how the outcome is of my trading day, don't let that dictate my actions. Meaning, if I ended the day in a loss, I'm not gonna start revenge trading and over trading. At the same time, if I end the day in a win, I'm not gonna start getting cocky and taking risky trades. So whether I won today, whether I lose today, whether it's break even, it's always a win for me as long as I'm still following my plan, because I know that all I need to do is stay in the game long enough and the account will compound. The good trades will come, the profit will come, the down days will come too, but you just need to survive those just like anything else in life.